Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On the 4-hour chart, the pair has turned in favor of the US dollar and closed again below the 1.1680 level. Previously, the euro broke below the ascending trend channel, and we're still cautious about concluding the start of a full-fledged bearish trend. Prices exited the channel not due to strong bearish momentum, but rather because of a prolonged correction. The EU-US trade deal provided short-term support to the bears, but a sustained bearish news background is needed for a further decline toward the 127 Fibonacci level at 1.1492. A bounce from this level could trigger a short-term rebound in the pair. On Tuesday, the EURUSD pair continued its downward movement and closed below 100 Fibonacci retracement level at 1.1574. This suggests that the decline may continue on Wednesday, targeting the next Fibonacci level at 76%, 1.1454. A consolidation above the 1574 would support the era and a possible upward move toward 1645. The wave structure on the hourly chart remains simple and clear. The last completed upward wave broke the peak of the previous one, and the most recent downward wave broke the previous low. Thus, the current trend can be considered bearish, although it has frequently shifted recently due to the news background. Donald Trump managed to sign several favorable deals, which could give the bears renewed strength in the near term. However, it is worth noting that the most trade partners have yet to reach agreements with Washington. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. By the end of yesterday, the British pound had settled below the 1.3369 level. But let's take a look at the weekly chart. Here, the price has tested support at the MACD line. It's a blue line on a graphic. A drop below this line would open the way toward the 1.3040, the embedded line of the global price channel, coinciding with the resistance levels from July and November 2024. On the daily chart, the nearest target is support at 1.3265. The peak from August 2024. Reaching this support would automatically mean a break below the weekly MACD line. Intermediate levels on the way to the main 1.3040 target are marked on the chart: 1.3206 and 1.3090. This is the main scenario. Under the alternative scenario, a consolidation above 3369 would return the price into a zone of uncertainty, with an upper boundary at 1.3635. On the 4-hour chart, the price is showing signs of consolidation below 3369. From above, the MACD line is approaching this level, reinforcing it and slightly increasing the likelihood of a downward move in connection with the FOMC meeting this evening. That's all for today. See you online soon.